What's up, everybody? Welcome aboard to Trading with Bubba. What's going on? Markets are a little bit wild today. Earnings are the story of the day. GDP is the story of the day, and of course, we can think that the markets may want to go higher, but I think that they're going lower today. I wouldn't be surprised to see a turnaround, what we would call a rip your face off rally. But overall, I think that we're headed south. And we'll still be looking to sell, but not so aggressively today. I think today is a day that you want to watch here a little bit. The markets are extremely oversold. And typically, when this action happens and they get oversold as you're watching, okay, you typically will get some sort of a bounce. And typically, these short covering rallies are vicious, okay? And I think that's something to take note of, okay? In markets, when you get short squeezes or short covering rallies, they bring you much bigger rallies than you expect. Okay, so for the last 3 or 4 days or a week or so, we've been looking at levels to sell, and we were talking about selling every rally. Today, not so much. Today, again, I'm not telling you to get long, but I think if you're looking to take a shot somewhere today, the long side is the right side to be on. And again, I'm not encouraging anybody to gamble. Okay. But we need an awfully big rally for me to want to sell again. I'd say almost 355 in the Qs, and I wouldn't do anything else here. Again, I don't think that the probabilities don't favor you getting short here. Buying here is kind of trying to catch the falling knife. So you're not putting yourself in a great position. I think you have to either wait for it or decide that you want to take a chance and go long here for a day. Again, it's a low risk trade, but it's also a trade that it may not make it, right? So, I mean, the dollar amounts are low, but look at the Qs are breaking down. The spiders, which we've talked about, continue to break down. Okay. And I mean, the spiders, I would look at 420, but I think if you get a rally, they're going to go through 420. Okay. I'd be more looking at 422 to 425. You had the Russell, which is having a big spike, and I think this is a good example to look at. Okay, it's having a pretty solid spike today. It's the only market that's higher right now, and it wouldn't surprise me if by the end of the day they're all higher. Okay, and again, I'm not predicting. I'm playing the probability of the market, and that's why I choose to sit back and watch. If you look at the Bollinger Bands here, just to give yourself a general idea, and again, I don't typically use them myself, but I do use them to teach with, okay? But if I'm looking at them, here's the spiders. You can see the spiders have been oversold for about 3-4 days now, okay? It favors a potential bounce, a reversion or a mean reversion. The Qs are oversold as well. I can tell you that without looking, but there you go. They're well oversold, very similar. So when you see markets get this far oversold, again, I'm not encouraging you to buy. I'm telling you to stay on the sidelines if you're going to trade, not looking to get short here. I think if you try to sell them here, you're going to get them rammed up you know what, okay? Because you're going to see these moves come flying back, and those will be the selling opportunities, okay? Here, you can see the very same pattern in the Russell, and you're getting a bounce in the Russell, and it wouldn't surprise me if we retrace back to the mean, okay, which is about a 3% move from here. You know, that if markets get wild, okay, a 2, 3, 4% move is nothing that's not even an anomaly. Okay, it is something that is expected. And I think that when you start to understand and look at these markets, I mean, look at here, Meta. Meta was wild after the close last night, all over the place, but it's breaking down, and it's right on a support level. Okay, now it broke below and came right back through it. If I were looking, now again, I am not encouraging you to buy anything here, but this would be a level I would be looking at in a stock that has been relatively strong while the rest of the markets have been weak. Apple continues to get hammered and is now breaking down through another level. Okay, so again, you're starting to see some excessive selling, and typically the excessive selling could lead to some buying, and I think these are things that you have to learn to understand. You're playing a game, you're playing or dealing in a probability model, okay? And in a probability model, you have to play where the odds are, Okay, it's not what your opinion is. It's not what you hear on TV. It's not about the news. It's about what is the probability. Okay, Apple, is it going to go straight down now? It's from 180 to 167. Okay, is it going to go to 160? It might, but don't you think there might be a rally in between here? So if you're looking to get short, okay, and you want to be short this market, which I am, and I like it that way, but this is not the time to enter or create brand new positions. You must wait for rallies to appear to sell into them, because what will happen if you don't is you'll get that big rally and suddenly you're going to get puked out of your position and you're not going to be there. You're not going to be dressed for the party, right? It's always, you don't want to, if you're going to be at the wedding, then it's okay to be at the funeral, but you don't want to be at the funeral if you're not going to get to the wedding. Okay. And that's something that, people don't understand, that you're playing straight probability here. The odds of the market's falling much further, it can happen. Okay, again, but at some point, and I will put it down to the next 3 days, there's going to be a massive rally. Okay, that will be a sellable rally. But if you're not prepared to sell it, okay, if you're already emotionally spent because you tried to fight it now or tried to add to a short position here, I think you're going to find yourself in a bad way and not being able to participate, which will create more ramifications down in your trading career. Okay, I think it's very important for you to understand that you gotta play the market probabilities and what you're seeing. And of course, if we go back to the IWM, okay, I'm not telling you should have bought here, but I am not at all surprised that you're seeing a sharp rally this morning. Okay. And again, I would not be surprised, although we're getting hammered right now. Okay, here, let's take a look at the futures chart. You can see they're pushing them lower once again. But I would not be surprised to see at some point suddenly it turns around. Okay, and suddenly the buyers become explosive. And why does that happen? Okay, why do buyers suddenly become explosive in a market that looks like crap? Well, here's what happens. Okay. You got a lot of shorts out there right now. Okay. Now, when the markets are supposed to go down, okay, and you're short and you're waiting for them to go down, and suddenly they kind of stop going lower. Okay. And you go, wait a second, why are these not going down? They should be going down. Everything says they should be going down. And all of a sudden, some buyers start to nibble in, and you start to see buyers buy, and suddenly what you thought was going to happen is no longer happening. And now everybody looks at each other. And I'm going to use the floor trading as an example. Sitting on the trading floor, you're short and everybody else is short. And suddenly, boom, they start buying. And now everybody's chasing over each other to get out, okay, to either get their profits or cut their losses, okay. And I think that you have to be very patient here. And again, use the probabilities of when you enter the trade. You never want to be a buyer on an extreme rally. You never want to be a seller on an extreme break, because you're really chasing a market that's probably going to have mean reversion. This goes back to when we talk about the phases of the market. Okay. Now here's a perfect look at a market. Okay. And you can see that we trended lower, and you got the big sell-off the other day, and now we're starting to see a little bit of a bounce. Natural. Look for an opportunity, wait for a rally, find some levels. And again, if you're looking, for example, at the IWM, the first place I would even consider would be 167. Okay. But I'm personally going to try to wait until 170. Okay. If it's going to happen. Okay. Now, how I'm approaching what's going on is I've been cleaning up some of my short positions. Okay. And if I've had spreads on in options, okay, I'm liquidating the short side of the trade and going to hold the long side, looking for that type of bounce. Now, it may or may not come. Okay. But at the end of the day, I've already made money, and I now want to look to get to the other side. But I also don't want to get trapped when we do see the potential spike, and you see them all the time. I mean, it's more prevalent and easier to see sometimes in the commodities, but look at what happened here in crude oil when it spiked up to 95. Okay, and then it fell right back down. This is what you're waiting for. If you're in a trend in one direction or the other, and the trend in equities is certainly low. Right? So all we're doing now in equities, we're saying, okay, the trend is lower, so we want to sell rallies. Remember, we go talk about double tops and double bottoms, right? In a downtrend, you're looking for double tops to sell, okay? Or you're looking for a resistance level to sell. In an uptrend, you're looking for support levels to buy or double bottoms, right? So here, we're in the middle of nowhere here in the spiders, okay? So what do I need? Well, I need at least a rally to 420. If it don't go to 420 today, I won't sell it again today, okay? Now I'm already short, so but if I'm going to add to it, I'm not going to add to it as it's at an extreme to the downside. There's not a logical spot behind if you add to trades that are at extreme levels, because the probabilities favor at worst some kind of reversal. It doesn't have to be as big as I'm talking about right now, okay? Although I do expect that, but whatever comes out, if you're working and trying to use tight stops, okay, to get in and out of these trades, you're going to get whipped around, and you're going to lose thousands of dollars in the $1,000 range. That doesn't help you, okay? The art and the game playing of being a trader, okay? Now everybody wants to make it like it's the easiest thing ever, okay? Every advertisement you see, all the bullshit out there is it's great, you're going to make billions. Trading is hard, okay? It takes focus. It takes the ability to separate your emotional side, the stuff that you read in the Wall Street Journal, which I've never read in 45 years, okay? The stuff you might see in Barron's or the stuff you might see on TV, that's all bullshit. It's nothing. It's garbage, okay? Everything you need to know is right here, okay? Everything you need to see is right in this chart, okay? The footprint that this market leaves tells you everything that you need to know. And if you're going to put yourself in a position and sell into the hole, now you might make money today, but overall, if you go and watch these, you'll get destroyed every time you sell, either buy tops or sell bottoms, okay? Because again, we're sitting here watching together, and I will bet you, okay, that these markets right here will not violate that bottom right now, and if they do, they'll come right back through it. Now, it doesn't mean we're going up. Again, all I'm telling you is that why would I want to sell at an extreme, okay, when the odds favor that extreme may create an opportunity and go back the other side, okay? That's very important to understand. I mean, here you're watching. Here's another product. Again, it doesn't matter what they are. The charts are going to all be the same, okay? And you can see that here we are. We're testing some extreme lows. Now, again, can we go through them? Yeah, sure. There's not a question that they can go through, but how far can they go through? You're here to make money. How much money can you make? And how are you going to feel when they turn on a dime and run the other way? Okay. And I think that at the end of the day, okay, you have to be very focused to what you're looking at. Okay. You've got to make sure that you understand where your exit is. Okay. And I think that you just have to, allow the markets to work and look for the footprint. Now, again, there's no trade for me right here because I'm looking for a potential blow. Now, there is a potential setup in the Dow future, which would equate to the diamonds, but I don't day trade options. Okay, I day trade futures. Okay, and I'm going to watch this trade because I'm going to make this trade if it shows up here. Okay, which it looks like it's going to. Okay, I got to wait for another minute, but I'm going to make this trade live with you guys like I've done in the past. Okay, because this is setting up. Notice the heavier volume. Okay, over the last couple of hours, you're getting a spike in volume, but you're not getting it in the spiders or in the S&P. You're not getting it in the Qs or the NASDAQ. Okay, you're only getting that move right now in the Dow. Okay, or the diamonds. So I'm going to go ahead and make this trade. I got to wait till it completes bar one. Okay. Now this is a very short term. This is a 4-minute cycle that I'm trading here. All right. But this is what I trade every morning live with my members, and I'm going to buy these right now. Okay. I got to wait till it closes, and I know it's going to close, and I'm already qualified as a blowout bottom. So I'm going to switch to the 1 minute right now. So now I'm looking for a green bar, okay, to turn this around to become a buyer. Okay. Now, right now, if I get an entry right now, my stop, which is the most important thing, you got to know your exit, is going to be 32,917. 32,917. Okay. So from wherever I get in it, okay, So now, right now, there's no trade. Right now, I'll tell you, we'd have to 94 or above is going to be an entry. Okay. So let's just see what happens. And again, we're going to watch this. And like I said, I will trade this. I'm going to trade it live with you with my own money. Okay. And we will see what's going on here, and we know where our stop's going to be. Again, I got to wait. I got to let the bar complete. Okay. So let's just see how she works here. Okay. So we're getting closer. So we're going to get a buy here. Okay. So I'm going to go ahead and play it. Okay. And I said the stop was going to be at 32. 917. I don't get my stop in, so I don't have to worry about it. Bang, bang, bang. Okay. So now I'm in. Okay. I'm in and I'm profitable right now. Again, I don't have enough profit to get out. Okay. Hold on 1 second for me. So, okay. So I'm watching, and again, I got a small profit, nothing to get crazy about, nothing to be excited about. But again, I have to manage a trade. So I'm watching, I'm saying, okay, so here's a trade that this is a pretty key support level for me. It's not going to change. My stop to the downside, my max risk is in play now. The first adjustment I'm going to make is if I get to a point that I can move a stop to where my trade becomes at worst break even. Okay. And right now I got a small profit. Okay. Now it's not, I don't have enough room to go ahead and lock in a profit or lock in a break even, because if I do that, I'm basically just giving it away. Okay, because I'm would 99% get stopped out. Okay, but again, I'm watching now, and now the reaction I'm looking for, I'm not getting. I'm looking for a much faster move higher. Okay, I was looking for this to make more of a V shape, kind of like this, where it goes bang and then bang. Okay, this did not do exactly what I'm looking for. So now I'm going to be less careful about where my stop is going to be to protect it. The next time I get to a slight profit, okay, I'm going to tighten up my stop and be willing to sacrifice at break even should that be the case, which happens to be right now. All right, so now I'm at break even. I've got no risk on this trade now, and I'm gonna let it trade. You'll hear it if it bangs out. Okay, I'm in it and I'm long. I'm profitable right now, a couple $100. Okay, and I'm not doing anything. I'm going to let it go. It is now starting to do what I'm looking for. And this applies to every chart. It applies to every trade. It doesn't matter. Okay, this is what you got to understand: is to let the markets trade. Okay, and follow the footprint. Whether I'm trading the future, or if I want to trade the diamonds here, I'm going to trade the diamonds here. You'll see the similar pattern, not exactly, but very similar. Okay. Why? Because the pattern is related to the same thing. Okay. So you could have bought the diamonds. And I'm not saying that you bought the diamonds. And, I think that you have to watch. I'm making a nice little profit now. I'm not huge, but again, listen, a few $100 is a few $100, right? So I'm going to raise my stop a little bit now. Okay. And again, and I'm out. So I took my money. I'm out. I'm on to the next trip. Okay. Does that make sense to y'all? And again, I know you can't answer me because nobody talks to me, but that's what we're trying to do. And this is what I'm trying to work with you on every day here. Okay. Is the ability to read and focus on the chart and focus on the market. Okay. This is what I want you to learn to understand, is that it's all about the footprint that the markets leave. Here, if we go back, I'm going to bring it back over here for a minute. Here. So here I drew for you here. What did I tell you? That these areas would stop it. Now, again, it doesn't mean they're going to go straight up from here, but these areas would hold. And they did. Now, again, that's not 100% all the time, but you have to make a commitment based on probability. Okay. Now, again, the way they're acting right now, there looks like there could be another leg to come lower here. Okay. Because they're not getting, you should get, when you find that initial bottom, okay, you should get a faster response to the upside. Okay. Or if you find the initial top, you should get a faster response to the downside. We're not getting extreme fast responses here. Now, part of it's because markets are slow, because even though we should be busy, we're not. But at the end of the day, understanding these kind of concepts, okay, are going to give you much better success. Again, this is not an easy business. You're not stealing anything. There's nobody handing out $100 bills on a street corner, okay? Or there ain't no free lunch. You got to sit here and if you're going to trade actively, you have to focus on shorter term charts, okay? The shorter the chart, the more trades you can make. And I am not telling you, neither one is right or wrong, okay? It's what's right or wrong for you, okay? That's your focus is what is the best strategy for you to use, which is why when we first started this show, and maybe on Tuesday we'll go through it again, but we'll talk about the trading plan, because each cycle that you trade, okay, has a different plan, okay? Like I've got overnight positions that I carry. I've got investments that I carry. I day trade futures every day, okay? Now, again, if it's not that busy, I'll walk away. This morning usually we trade for an hour. This morning we traded for 35 minutes. I had 2 trades, 2 winners. Goodbye, good luck, and I was done. Okay. Now, again, but it's not anything that you can't fix. Okay. There's nothing you can't put yourself in the best position. Again, it doesn't guarantee you're going to make money every day because you're not. All right. Understand that this business has drawdowns. The reason that many people can't trade is because they cannot take the emotional beating of losing money, okay, and going through a losing streak. Well, guess what? You're going through a losing streak. Baseball players, they go through losing streaks. Football players, they go through losing. Everybody goes through losing streaks. Life is filled with streaks. Okay, it's how you deal with them. Okay, I'm a poker player as well. When I get cracked with pocket aces, or like they call pocket rockets, okay, and I have no business getting cracked, but I did. What am I going to do? Am I going to be miserable and fire in and go on tilt and lose all my money? Or am I going to say, hey, that's part of the game. That's part of what happens. And until you understand that trading is the same thing, because, again, we're playing a game. Okay. Anything that can be run by mathematics, okay, is a game. And this is a game that we're playing right now. Okay. And we're playing it by using the market footprint. Okay. We are playing it by using the volume around it. We're using all the tools that we can around this market, okay, to put ourselves in the best position to be successful. It doesn't matter if I'm looking at a 4-minute chart. It doesn't matter if I'm looking at a daily chart, okay? What I have to be prepared for is how to protect myself, know where my exit is if I'm wrong. If I make a trade and it's wrong, I got to get out. Now, if you're trading options, you can build options trades that have built-in stops, so to speak, right? For example, I sold a put spread this morning in the Qs, okay, assuming that we might get a rally between today and tomorrow. Now, right now, it's a losing trade, and again, I'm not worried about it right now, okay? I mean, again, it only takes one big rally. But again, I know what the risk is, and basically the trade that I created was the same as buying a call, except that I bought the call for half price, okay? Because the way that I was able to create the spread allowed me the ability to take out the time decay, okay, and buy the equivalent call at half the price that was priced on the board. Of course, that's floor trading experience, but that is also experience at looking at markets with both eyes, okay, with an open mind. Okay, and stay away from all the crap that is out there that tells you that this is going to happen. I got the secret, there is no holy grail here. Okay, this is a game. Master the game that you're playing. Master the geometry, the math of the market. Okay, learn to read the map. Okay, and you'll put yourself in a high position of probability. And if you can get yourself to 60 to 70% probability, okay, then you're going to win. Okay, you're going to make money. Okay, but if you keep fighting, and you fight the trend, and you fight the tape, and you fight the market, okay, and you think you're smarter than the market, you're not, okay? The market is always right, okay? The market is an inanimate object that trades strictly from order flow from everybody else, okay? That's how the prices are established. So if you're going to think that you're smarter than that, you better find a new career, because you ain't going to make it in the trading world, okay? In the meantime, I'll see you all back here on Tuesday. Have a great week, everybody. Have a great weekend. Lousy football game, so I'm not even giving you a pick tonight. I'll see you back here. Well, actually, I'll be here tomorrow with my daily update, but I'll see you back here for the full show on Tuesday. Have a great weekend, everybody. We'll see you later.